Hi everybody, this is our next training course for MYOB. Today we're going to be looking at exercise 9. Exercise 9 consists of a few different components. So we're going to learn essentially how our reports operate. We've got different types of reports, cash basis reports as well as accrual basis reports, which is quite important to understand the differences and how they apply or when they apply. We're also going to be looking at putting in full payments for the custom invoices that we entered in exercise 8. And we're also going to learn about reversals, which is quite important when mistakes are made or have to be refunded. Item services have to be refunded back to our customers. So there's 3 key objectives in today's training. We'll start off with having a look at a report, first of all, and then understanding the different reports. This is quite important as well because up till now we know that our total balances have been accurate, but what we don't know is whether we've actually correctly selected the right tax accounts, and also we may not have correctly selected the right allocation accounts as well. So, for example, if you have incorrectly used an expense account, number 6, instead of an income account when putting in your sales invoices, then the total figure may be correct, but the profit and loss report will not be correct because the monies that should have gone into income have now come into as an expense. So the reporting side is quite important because we can identify possible errors. Although on top of that, we will be looking at reconciliations as well later in one of our later exercises. And this function obviously is quite important for the identification of incorrect figures and so forth as well. So there's a few different steps we can take to ensure the accuracy of our financial information. So first things first, we'll have a look at our profit and loss report. Now, the first question or the first part of this exercise wants us to have a look at a profit and loss statement year to date, and we need to have a look at the cash basis report. So there's 2 types: there's a cash or there's an accrual report. So first things first, we're going to reports over here, go to accounts, scroll down. So we've got our profit and loss report statement, which is on an accrual basis, and we want the profit and loss report on a cash basis. This one here. This is under the heading of small business entity, and for a business to qualify for a profit and loss cash accounting method, there's a criteria involved. Now the criteria is a turnover of under 2 million. So if the business is a medium to a large business and it is turning over more than this figure, then it needs to account using an accrual basis, not a cash basis. Now, there's obvious benefits. There's benefits and negatives both ways, but for a small business, the biggest benefit is that it only needs to report in its BAS reports the GST paid and collected figures once money has been received or once monies have been paid. So, for example, if you make a sale today and our BAS reporting period is also today, but we haven't received monies from our customer, when we generate our reports, the GST component will not appear on our reports on a cash basis. Hence, you won't have to worry about paying that GST part of the invoice. Whereas if we're using the accrual method, the GST component will appear in our reports, our cash-based profit and loss reports, as well as our GST reports. Sorry, accrual-based GST reports and accrual-based profit and loss reports, the GST will appear even though payment hasn't been made yet or hasn't been received yet. Hence, we need to account for that GST in our reports as well. So that's how that all works. Now, obviously, the main benefit here is that in a small business, you will have customers that default in payment or don't end up paying the full amount. So instead of having a fair bit of work in making adjustments and getting your figures accurate with the ATO, because we're only having to account for the GST once the monies have actually been received, it will reduce the burden of making adjustments and so forth in your batch reporting. So that's the main benefit for a small business. So to look at that report, we go to cash-based profit and loss. We'll have a look at a period from the 1st of May until now, because we haven't been entering in transactions the last 1 or 2 weeks. So we'll have a look at the whole month's worth of information. Now, if we're doing this, if we're doing a batch report for a quarter, we'll put in the dates that cover that quarter over here and run the report again. So what we're looking for here is a net profit and loss. According to our stencil, it says that we have made a loss of negative 11.11.9 cents, which is correct. And the obvious reason for that is we haven't actually made any money yet. Income, we've made sales, we've put sales in the system as invoices. Because we haven't actually received money from our customers, and we're using a cash-based reporting method, that income hasn't come across to our report. Whereas our cost of sales and expenses, because we've actually paid those expenses using spend money in the previous exercise, those figures are appearing, and hence we made a loss of $11,119.69. So that's correct. We'll now move on to the GST report. So we'll close this one off, and then we'll come over to GST over here. The first one we'll look at is the GST on a cash basis, which is here, and we'll display this. Now, all our expenses have been capturing GST. We've had no GST-free sales. So essentially, it's going to be our total income, our total expenses divided by 11, which is this over here. So that's correct, and there is no GST that we've collected from our customers, because as mentioned earlier, we haven't actually received any monies from our customers at this stage. We've only sent them invoices. Once they pay us, that will then come across into this field here as GST and into the total sales field over here. So this report is also. Now we'll have a look at the accruals report. And the reason I've done this is so that you can see now the difference between the two reports. I'm going to backdate that to the 1st of January to pick up my pre-conversion purchases as well. I'm going to go back to 1st of March. Okay, so now you can see that total tax collected is 3452 and total tax paid is 2905. Now, the reason why we now have got tax collected here is because we're using an accrual-based report, and this report simply picks up all the invoices that have been entered, irrespective of whether we've actually received money from them or not. And hence the reason why now we've got GST collected, as well as a sales value. And our tax paid has also gone. Previously it was 1,111.96 cents. Now it's come to 2,905 because it's picking up those supplier invoices that we entered in as credits as well. So far, the reports are accurate. We'll have a look at the last report, which is our balance sheet report. The balance sheet report is here. We'll have a look at the balance sheet report as of today's date. I'm going to hit on display. Now, balance sheet report will give us a better picture of how the business is going. We'll have a true picture of the current value of our assets, which is what the company owns, as well as its debts and liabilities. So what I'm looking for here is making sure that, first of all, my total figure is correct, which is this one over here. And I'm also wanting to make sure that there is no historical balancing figure coming up here as well, which there isn't. So that shows that my balance sheet report is also accurate. Good. So that covers the first part of this exercise. We've got two quick questions there. Difference between an income statement or profit and loss report and a balance sheet. So quite simply, an income statement or profit and loss report shows us whether the business is making money or not. It's a true reflection of the business's cash flow. Obviously, if we're bringing in more money than what we're spending, then we're going to have a better position in terms of our cash flow. Our balance sheet report doesn't actually pick up any information, or doesn't pick up any figures on our cash flow. It simply shows you a better reflection on the financial position of the business from the perspective of its assets, liabilities, and its equity. So when assessing a business, it's always good to have a look at both components, as they're both quite important. The other key difference between the two reports is an income or balance or income statement or profit and loss report shows you the performance over a period of time. So it could be a month, or it could be a quarter or a year, depending on what you're looking at. Whereas a balance sheet report only looks at the business from a point in time. So as of today's date, for example, or as of the end of the financial year, 30th of the 6th. That's another key difference. And the difference between GST paid on accruals and cash basis I've already covered a few times earlier. Okay, so now we'll start off with the second part of the exercise. Exercise 1, we're going to have a look at our trade debtors report. We had a look at that earlier. We'll have a quick look at it again. So we'll close this one off, go to accounts list, looking at trade debtors. That's the figure there, good. Okay. All right, so what we're going to do now is we're going to put in some payments. So we've been receiving payments from our customers, and in exercise 2, we're going to put the payments in. Now, first things first, we go to sales. We're receiving payments, and the first one is we've received payment from JRC Transport, and it's for a figure of 172568. Now, the system picks up partial payments. Okay, so it's important that you apply the payment to the correct invoice. I can actually apply it to this invoice here, but what that will do is it will leave a figure that it's out of balance by, and it will put this figure into another account, credit account. So it will accept this, but this is not what we want to do. We want to associate the payment by JRC to the actual invoice that they are intending to pay. I'm going to delete this one off, double click here again. So you can see that amount received equates to the amount that's open, and hence the out of balance is now 0. Record that one. I'm going to put the next one in. Okay. This time we've got a payment amount of 5353 and 35 cents. That's for this particular invoice over here. So I'm just going to click on this, and it automatically applies that amount there. I hit tab, record. Lazy design. 1077. There's a few invoices that are open. I'm going to click on the one that it relates to. Butter chicken. 2950. Magazine. 971 cents. Printing. 2077 and 63 cents. Snappy design. 979. Chevy Winter. 150. And snap printing again. 1479 and 55 cents. Which is this one here. Oh, an extra zero in here. Fixes that up. Okay, so now I've recorded that, and we want to have a look at our trade debtors report again. And we want to confirm that the trade debtors account is back to 21209, which is where we started initially before we entered the sales and put the payments in. So this is accurate. And we'll also have a look at the aged receivables report for our sales. So we're going to go here. Aged receivables is the first one. We hit display. And as you can see here, that all the invoices from 0 to 30 column, which were previously here, have now closed, and hence they're no longer on this report. Only the invoices that we entered 2 months ago, our pre-conversion sales, are remaining on our report. So I'm happy with that. We'll come back to the command center, which is the main screen over here. And the third and last component of this exercise is showing you how to put a reversal in. So once again, this is if, for example, a mistake has been made and we wanted to reverse the invoice or the payment in order to put the correct transaction in. Reversing can be used. Alternatively, if customer or supplier wants their items credited, or they want their items, or they want to be issued a credit note, this can be used for that purpose as well. We're going to cover credit notes in more detail in a later exercise, but this is just to show you how the preferences work. Now, if we go into set up preferences over here, and we go to security, at the moment, this little tick here, transactions can't be changed, they must be reversed, is actually not ticked. So if I go into one of my invoices, and if I wanted to, for example, make a change, notice that there was an error. I can simply go into edit and delete the sale. It'll accept that. But that's obviously not going to be practical. If you're in a situation where you've got multiple users, you don't want to have that there just in case an incorrect invoice or an invoice is incorrectly deleted, it becomes a big nightmare trying to find invoices that have been edited or deleted from earlier periods that have already been reconciled. So it's not always a good, wise thing to do, and that is to have that preference set the way it is. So what you want to do is go to Preferences, Security, and put a tick there. Transactions can't be changed; they must be reversed. So a user is able to go in. Say, for example, we've realised a mistake with this invoice. You can actually now go in, edit, and reverse the sale, and then put the sale in correctly. Now, what that does is it creates an audit trail. So if, for example, an issue has been realised, someone has incorrectly reversed something or whatever the case is, you're able to see exactly what's been done, which invoice has been reversed and what they've done. It will appear in your transaction journal. Whereas if you to delete it, there is no evidence left in the system for you to find that transaction. So that's what that's all about. In the exercise, it asks us to go into that setting and to select the option, which we've already done. Then it says go to the payment side and it wants us to reverse a payment for JRC transport. Now, we've got two sides of this. We've got the actual sale itself here, and we've got the receipts or the payment. Now, what's this? Not to reverse the sale, but to reverse the receipt or the payment. So I've gone into here, and I'm looking for that invoice 14 for 17,258.68, which is here. Click on the arrow. Invoice 14, which is correct. Now I'll go to Edit, and I'll go to Reverse Payments over here. It's created the reversal and a credit. I'm going to record that. Yes, that's fine. Okay, so now what we'll see is we'll see another invoice that's been created for the reversal. This is what I'm looking for now. Closed that and I just refreshed it. Here it is now. So this tells you that that invoice has been reversed, and there's the debits and credits, which is what I wanted to see, which is good. So now I want us to have a look at our trade debtors report, and what we should find is that the trade debtors report now is 22,934 and 68. The reason it's gone up is because the payment that we received has now been credited back to the customer. Hence, our trade debtors, or the amounts we're expecting to receive, that has actually gone up now. Now, in the next exercise, exercise 18, when we do trade credit notes, I'll give you more information about what happens in the returns and credits when we apply those reversals. So that concludes what we aim to achieve in this exercise. So we looked at reports, the differences in the reports, how to generate the reports. We looked at the definition of cash reporting versus accrual reporting. We looked at how to put sales payments in from our customers, and we looked at the reversing function. Thank you for listening.